In this video, we are diving into the performance of Europe's best and worst P2P lending platforms. We will look at how they have handled this year's challenges and track key stats like portfolio growth, funds in recovery, and overall investor confidence. Spoiler alert, some platforms are crushing it, while others are, well, struggling to stay afloat. Now, if you are new here, you might be wondering, why does this even matter? It's simple. As a serious investor, you want platforms that deliver consistent results over time, not just flashy promises. Performance data is a gold mine for spotting trends and making better decisions. It's not just numbers, it's your money's safety we are talking about. Quick disclaimer here before we start, this is not investment advice. Think of this as one piece of the puzzle to help you make smarter, data-driven choices. Keep in mind though, numbers are just part of the story. A platform's history, transparency, and management decisions are equally crucial. For example, a 3-year-old platform with flawless track record and zero funds in recovery is a winner compared to a platform that doesn't publish any data or owner terms and conditions. On the flip side, a new platform with great transparency and innovative ideas could be still worth a shot if it's ticking all the right boxes. Alright, let's jump into the data and see how Europe's most popular P2P lending platforms stack up. Mintos, Europe's largest P2P platform, has had a mixed year. They have slightly increased their loan portfolio while keeping about 25% of it in recovery. This includes pending payments and loans stuck with suspended lenders. Last month, they have introduced new loans from Placid Group and IDF Eurasia, and even started offering fractional loans from a Mexican lender. However, with 143 million still in recovery, Mintos remains a risky bet for retail investors. The platform reduced its loans in recovery by just 1.43% this year, which is rather underwhelming. If you thought Mintos had issues, Esketit numbers might shock you. Over 57% of its portfolio is in default. The CEO hoped to recover 38 million euro this year, but they've only managed to recover 8.13 million, about 21% of that goal. And looking at the bigger picture, it's a drop in the bucket. Misleading marketing, which focuses only on the last 12-month portfolio, that doesn't really default because the loans haven't matured yet, as well as the new investor fees, has not helped to regain the community's trust. Investors are understandably frustrated, which is likely why Esketit portfolio decreased by close to 12% this year. Some investors had enough. Now, here's a platform doing things right. PeerBerry grew its portfolio by 9% this year and reduced funds in recovery by 3.52%. Only 328,000 remains still stuck in war-affected loans and repayments are on track. PeerBerry has consistently met its obligations, making it a solid choice for both short-term and long-term loans. If you're struggling with investing your available funds, it's worth looking into long-term loans that show a reliable performance. Now let's talk about reliability for a second. Since launching in 2017, Robocash has maintained a spotless track record with zero defaults or funds in recovery. This year, their portfolio held steady at 80 million euro, even as demand surged. If you value stability, Robocash is hard to beat. Another standout performer, Esketit, grew its portfolio by nearly 25% this year. They have managed geopolitical risks effectively and introduced new investment opportunities without compromising investor returns. While the loan availability has not been up to the expectations of many investors in the past few weeks, Esketit's management has been able to navigate challenging times without any harm to investors, which cannot be said about all platforms. For rental property fans, InRento is one of the standout platforms right now with zero defaulted loans. Their platform focuses on rental property investments, which tend to be more stable than other types of loans. Recently, they announced their first project in Ireland, which is an exciting step as they expand to new markets. Throughout 2024, InRento has grown its portfolio steadily while keeping its quality flawless. If you're looking for reliability, this is definitely a platform worth considering. Now let's talk about Fintown, a Czech-based platform that's also doing really well. Fintown offers investments in rental units managed by the BRF Group. Even though it's been around for less than 2 years, it's already managing close to 10 million euro of investors' funds and fulfilling all its obligations. This year, their portfolio grew by an impressive 189%, providing stable returns for investors who prefer rental units that are already up and running. If you are into steady growth and solid performance, Fintown might be a great fit for you. Then there is Indemo, a platform that's already making waves. They specialized in discounted Spanish debts, which might sound a bit niche, but it's been delivering already high returns for investors. Indemo has been operating for just over a year, so yes, it's still new, but repayments have been picking up pace in recent weeks. Plus, the platform offers one of the best user experiences out there. If you're open to trying something fresh with attractive returns, Indemo is worth a look. Let's move to Income Marketplace, another popular platform. This year, they grew their portfolio by 85%, which is huge. They've also added a few new lenders and managed to reduce funds in recovery by 3%. That's overall good news for investors. Income offers some of the highest yields in the market, but keep in mind that liquidity and diversification are still a bit limited. If you're okay with these trade-offs, Income Marketplace could be a strong option. Capitalia is another name that keeps delivering. This month alone, its portfolio grew by 5%. Compared to January, the platform has increased its assets under management by 36% and its default rate has stayed stable. For investors who want steady and reliable performance, Capitalia continues to impress. Next up is Profitus. They've also had a solid year, with the portfolio growing by 2% last month and 35% since January. The default rate has remained stable at around 5%, which is a good sign for those who want predictable performance. Crowdpear had a big year too. Their portfolio grew nearly 11% last month and 92% since January. However, their default rate also went up by 7.49%. That's something to think about if minimizing risk is a priority for you. Lande has also increased its portfolio by 36% this year. Unfortunately, with the increase of the portfolio, the default rate also went up by 6.42% compared to January. The good news for investors is that Lande manages to recover their debt faster than most other platforms. Then there is GoParity. While their portfolio shrank slightly this month, they have still grown their assets under management by 22% this year. However, their defaults have also increased by 2.45%. Debitum, on the other hand, has been a bit of a mixed bag. They have been aggressively promoting cashback campaigns and bonuses, which helped them grow their assets under management by 32% this year. But here's the thing, loans from Ukraine remain unpaid, and the platform's claim of a 0% default rate is not accurate. For serious investors, Debitum's history and lack of transparency raise some big red flags. Twino also struggled this year. Their portfolio shrank by 3.46% and their default rate went up by 5.44%. Instead of focusing on transparency, they've been offering bonuses to attract new investors, which doesn't exactly inspire confidence. Heavy Finance has had its ups and downs. While their portfolio grew by 20%, their default rate also climbed by 11%. The high interest rates they offer might look tempting, but poor risk management makes them a less reliable option for cautious investors. Finally, let's talk about Reinvest24. They've had one of the most disappointing years. Recently, the Moldovan Supreme Court confirmed Reinvest24 as a creditor for Kherson projects, which might sound like good news, but here's the problem: the platform is not processing withdrawal requests. That means that even if they recover money, investors cannot actually access it. This isn't being addressed by the CEO, and it's a huge concern. A third-party liquidator should have been involved to oversee repayments and make sure investors get their funds. Without this, the risk of fraud remains high. So those are the platforms that share some performance-related data openly. Unfortunately, not every platform is this transparent. Some don't reveal much to investors, and those are the ones you need to be extra cautious about. Investing in these less transparent platforms can be much riskier. Many of them operate like black boxes. You don't really know what's going on the inside. For serious investors, it's usually better to avoid these altogether. Looking at this year's data, it's clear that many platforms have managed to grow their portfolios, which is encouraging. However, the list of top-performing platforms remains pretty short. Only a few really stand out. Platforms like Esketit, Robocash and PeerBerry have earned their reputation as some of the best in the industry. But even they have faced challenges this year, particularly with cashback. Basically, there's been so much demand from investors that loans get snapped up quickly, leaving some investors with idle funds. This has been happening more often than it did last year. Because of this, some investors are exploring alternative platforms that offer more stable performance, even if they are not as well known. Diversifying into these platforms can help balance returns and reduce risks. But here's an important reminder. Historical data is useful, but it doesn't guarantee future results. The best approach is to focus on platforms with a solid track record and consistent performance. This way, you are more likely to see better long-term returns and avoid unnecessary risks compared to gambling on platforms with questionable management or poor history. So that's a wrap for this industry recap. If you found this really helpful, hit the like button and subscribe so you do not miss out on future updates. Thanks for watching, and I'll get you in the next one.